Hey, Scott, the streets are talking again, and there's all this talk about investment property, multifamily homes. Do you know anything about that?
It's so crazy. I've been getting those questions more and more frequent, especially in the last week or two. Maybe that'd be a perfect topic for us to talk about today.
Yeah, I think we just need to get into it. Hi, and my name is Suzetteloggins. I am a local realtor here in Sacramento. I'm always looking to provide white glove service to any of my clients to make any of their real estate dreams and goals come true.
And my name is 𝗧𝗵𝘂𝗺𝗯. I'm a local loan officer here in the Bay Area with Loan Depot, and I help friends, family, and people just like you build wealth through real estate.
So I know for folks out there that are just looking to jump into the investment world, it can be a little bit daunting. I know that I have been a landlord for a number of years. There are some financial benefits, but it can be also stressful just jumping into. Scott, what's your experience been?
My own family, we don't, well, we own our house, but I did help my cousin buy an investment property in Tahoe. And in the time they've owned that property, it's appreciated unbelievably. But then just the memories we've been able to have with family up in Tahoe has been unbelievable. And with some of my other clients, I've helped folks get, duplexes, triplexes, as well as 4-unit properties as well. And in each case, they're different, but it's been really interesting the last truly couple weeks that more and more people have been looking into investment properties.
You know what? I really think that people are just with the economy right now. They're looking at diversifying their portfolio, looking for some other investment types, because sometimes 401ks don't just do it for everyone. So I think it's really, really good that people are looking into that. So I think we have some really good information today to share that gives you exactly some considerations that you should look at if you want to get into the investment world. What do you think,
Perfect.
Scott? Yeah.
I think it's great. Let's get into it.
Let's go.
So Suzette, what do you think? Do you think we can come up with some tips for people buying an investment property or a multifamily home?
Yeah, I think I have something for you. Okay,
Let's bring it up.
Hey, Scott, I have something just for you.
Looks like you've been reading my mind.
Yeah, we have some tips. So let's just get into it.
House hacking or strategies. Do you have some thoughts around possibly, like, what is a house hack?
Yeah, house hacking, that's something that people have done for years, but there's always new terms for everything. So house hacking is when you have your primary residence and you actually just rent out a room, rent out a space. If you have a basement or an area in your house that you can rent out, then you do that, because what you would want to do is increase your income by generating rental income and then decreasing your expenses. As a first-time investor, I think that is definitely a good strategy to go for, because I feel that as a first-time investor, you need to pick at least one strategy and go hard on that strategy and really understand it. And then as you get really good at that, and then you can expand your portfolio into different type of investment properties. So I feel that in the beginning, you should definitely be focused on reducing your expenses and increasing your income. And as you stated, Scott, house hacking is a really good way to do it at first. Also, you can live in your property and then rent it out and buy another one. And Scott, guess what? What? There's another way you can do it also. You can also flip the property. So like, say you buy a house, you renovate it, you flip that one. That means you sell it and you purchase another property. How easy can that be? I don't know if it's that easy, but it is a strategy. There is another way that you can grow your worth. You want to hear about it?
Yes, I do.
Some people would like to just buy a rental property outright. And in buying rental properties, you can hold it for long term. You can pay down the mortgage, which is a snowball effect. Some people like to not have debt, but then there's other, trains of thought where people want to keep that cash in their pocket and just keep the debt going because they're, getting tax write-offs for the interest, and they're able to, in their taxes, write down the depreciation. Then there's also a way that you can trade up. So buy a rental property and then you trade up to a more expensive rental property or even multifamily properties.
That's awesome and super helpful. Suzette, wouldn't you suggest that for an investor, it's really important to have good research and understanding of the marketplace where you're looking to purchase that property?
That is definitely key. And what I really recommend for anyone that's getting into the investment world is to do their research, because it may not just be in Sacramento, but there's outlying areas that you can possibly purchase properties. And what I definitely recommend is that for anyone that's starting out, choose 20 properties just to calculate, practice your calculation, calculate your rate of return. There's a lot of things that you can do upfront before you get into the rental property, and then you're like upside down in it. That's not the goal of this whole investment strategy and growing your portfolio.
Suzette, do you have possibly a slide or something we can look at that breaks down your market in Sacramento, or just give us a high level idea of like how many rentals out there are versus owner occupied properties?
Yeah, I do. Let me show you.
I bet you did. It is almost like you're reading my mind.
Yeah, there's a lot of opportunity in Sacramento. So right now there's 40% of the households actually rent their properties here in Sacramento. And there's 60% of the households actually own their property. Yeah, as you saw, there's 40% of the households in Sacramento are renters. But, the median price in Sacramento, as far as homes, have went up. So investors may want to look a little bit outwards, outside of the city center, because they may have more opportunities out there. It has to make sense for them. You have to really look at the economics of that area, making sure that there's good jobs and the economy is really good, and also looking at your cash flow. But there may be opportunities to look at not just a single family home, but maybe multifamily homes. What do you think?
I think it's a great idea. So those numbers that we were just looking at, those percentages, it's inclusive of multifamily opportunities?
Yes, they are.
And discussing from a residential standpoint, what you're talking about is either single family, or when we talk about multifamily, it's like a duplex or a triplex, as great as like a 4-unit building. That's what you mean by multifamily, correct?
Exactly, especially for first-time home buyers. Yeah, you can definitely go out and buy an apartment building that has 18 doors, which are 18 units in it. But I think for this conversation, we want to really keep it down to that person that's really starting off, and probably up to a 4-unit, multi-unit building. You can get probably a little bit better financing, at this stage.
Perfect. Well, I think it'd be great to kind of, if you have something to look at, the differences between a single unit, like the income you could expect to receive from a single unit versus multi-unit or multi-family homes. Do we have anything that folks could look at to that?
Perfect. Let me show you.
Perfect.
So here you see single family versus multifamily. When you're looking at a single family home, which is very nice, is very manageable when you're looking at property management. But if you have that renter leave or you have any vacancy, then that means you're not generating any income. So that means that you would have to cover the cost to carry that mortgage and any expenses that you may have that month or for a few months. The other thing is that what is a little bit more appealing to people right now is with the multi-unit homes, because you may have 4 units and say 2 people, or you lose 2 renters, you still have 2 other units that are generating income from you. So the risk of losing 100% of your revenue is a little bit lower. You've mitigated it a little bit more. So there's pluses and minuses, because again, you may have that income coming in, but with the 4 units, you may have more expenses for the upkeep. And I think that this is definitely appealing to a lot of people right now. But I think one of the things that we need to discuss, Scott, is what kind of loan options, how can people get into investment properties, whether they're single family or multi-units?
There's tons of options out there. It would be amazing if you have something we could show the folks out there.
Voila, voila.
So there's definitely tons of options out there when you're looking to finance an investment property. If I tried to break it into 5 categories, there's going to be a conventional loan. Conventional loan is inclusive of FHA loans and VA loans, very traditional financing for a home. Those are for properties from 1 to 4, which we've been talking about here. 2, there's commercial real estate loans, and we're not going to get into that, but that's on properties greater than 4 units, typically for businesses or, like I said, anybody who's looking to find properties greater than 4 units. Another great option for people who have built up tons of equity in their home is taking out a home equity loan. Again, that's for those that already own their home. There's some pluses and minuses to it, but it's a great way to not have to necessarily refinance your home to take cash out, but use that equity and pull some of those monies so you can put that down on another property. There's also some newer types of programs out there called peer-to-peer loans. Again, it's a little bit more risky because it's somewhat new, in which you're crowdsourcing your loan. We can get into that also a little bit, maybe not today. It's a little bit more new than the time we have. And then there's private money loans, or what's known as hard money loans. What makes them really good is these are loans from private investors. They're less regulated. They can possibly go quicker, but you also have to be mindful that the interest rate you're going to be looking at is probably significantly higher. So anyway, is there any kind of slide that you have that at least visually can bring this together?
Yeah. First I want to just kind of talk about what I've been actually seeing as a realtor. I definitely see the hard money loan for the investors that are looking to flip. Those are, again, you buy a property, it's in distress, you get the hard money loan, and you want to try to flip that house as soon as possible, definitely within 3 months. That means that you have to be ready to go. But there's the other ones that are the government ones, the FHA, VA, which, you don't have to put any money down, especially if you're buying up to a 4 unit. And then also in Sacramento, we used to have a lot of USDA loans from the government where you had 100% financing. Not so much, because now Sacramento has been really developed, but you can still find some of those properties. You can go onto the USDA website and find properties that may be out of the city center that may be an option for you. So yes, I definitely have a slide so we can just kind of look at all the breakdown for what you just got through sharing.
Perfect. Now you're, again, reading my mind. So this slide just kind of breaks down those 5 different categories for retail investing. Really, what I do on a day-to-day at Loan Depot is primarily the first one, right? Conventional types of loans. The key takeaway for a first-time investor is the benefit is you really only have to put 3.5% down. Specific to FHA loans, there's just a couple things that you also have to be mindful of in order to qualify. Probably best to have a further conversation. So if you're interested in learning more, my contact information's down below, and I'm more than happy to kind of talk you through your own scenario. The other thing to think about is you have to be in these properties. The only way you can get an FHA loan is if you're going to live on the property. Similarly, VA loans for our veterans out there, great thing about that loan is you don't have to necessarily put any money down. But just like FHA, if it's 1 unit or 4 units, you have to live in one of them in order to qualify for this type of loan.
Yeah, these are definitely good options. And again, remember, this is Real Estate Made Simple with Suzette and Scott. Please comment below, ask any questions that you need to, because we are here to help. Remember, we're here to help. Remember to subscribe, hit that notification bell, because so when we post every week, you will get notification to say, hey, join us, because hopefully we have something good to say. And if there's a topic that you're looking for us to talk about, please comment below, because we're here to serve you. So, I think we're probably about ready to wrap this all up. So let's just kind of bring this all together.
Let's do it. One other thing to take into consideration, loans that are for investment properties typically have higher interest rates. And so it's just good to kind of know that going up front, so you're not truly surprised when you're like, what happened? Why is it a full percentage point higher than if I bought a single family residence? Similarly, for multi-unit properties, they tend to have higher interest rates as well.
You know what? That is really good to know. And I know that we are trying to keep this video very short. There's a lot more information about how to calculate your return on investment, your cash flow. I have a lot of information to share with. What I will do is create separate videos just to show you how to do those calculations, because this video would be too long if we got all into that information today. So let's just kind of recap so you know your takeaways, especially if you're a first-time investor. Make sure you comment below. Let us know if this is helpful for you. So let's get into it, the last part of it, and show you exactly the considerations that you need to think about as an investor. Okay, here are 5 considerations if you are thinking about jumping into the waters as an investor. The first thing is you need to do your research and practice. Research the areas, research the economy. You don't have to stay in Sacramento. You don't have to stay in California. If you go out of state, you can find pretty much some good deals, but you have to do your research about the area, because a real good trick that a lot of people are using is looking at U-Haul. Like, are people moving to that area? Are they moving away? And then also, I definitely recommend that you pick 20 properties, work with a realtor, go online and do your calculation as far as, does it make sense for you to buy that property before you even start submitting offers. The other thing is pick a strategy and a criteria. So you want to make sure that you have a target type of property. Are you going to do the house hack? Are you going to just buy a rental property out front? Again, there's different ways you can do it, but pick one and stay focused. Build your team. You can always reach out to me. There's other realtors that may be in your area that you're comfortable with, but pick someone that's knowledgeable. You have Scott here. He has experience as far as doing investment property loans. And again, you have to just kind of build a team around you. Knowledge is power. And if you don't know, ask. So you have to ask people. There's no shame in it. At the end of the day, you want to make money, right? So financing and understanding your expenses, going to your lender, finding out, can you qualify, what loans? Scott really shared a lot of information about the different various loans, which one works for you based upon what money you want to make out of it. The last part of it is making a plan, creating an action plan, setting some dates. Like Scott, don't you think that's kind of a good way to approach it? Create a plan for what you want to do on your investment?
Definitely a plan and a strategy and a good team going to help you have a chance of being successful as a real estate investor for sure.
Yeah, we talked about a lot, but is there any other information that an investor may need to know about financing?
Really, there's just a lot of different products out there, and like the interest rates for the amount of money you have to put down from 0% for for a VA loan, 3.5% for FHA loan, to there's even jumbo loan products that Loan Depot has, where on a jumbo loan, you can put as low as 10% down on a 4-unit building, which is amazing.
That's awesome.
You can also there's also, you need to be mindful. A lot of these situations, you're going to be looking to put 25, 35% down, depending on what your credit score is too. So there's just a lot to take into account, and making sure you have the right information, super important.
Yeah, that's why I really say, starting off, do your research as an investor, ask questions. And if you have to ask a question multiple times, you have to, because again, this is your money. This is an investment. So as an investment, you have to do your due diligence, because you don't want to jump in there and lose your money. Again, there's never a guarantee that you're not going to lose money, but you want to limit your risks.
Again, I'm Scott Thompson.
And I'm Suzetteloggins, and this is Real Estate Made Simple. Remember, subscribe, like, hit that notification button. We're here for you.
Bye.
Bye.